Hello everyone, welcome back. I have seen some of the YouTube channels where they have showing that it's a bloodbath in market. I'm not sure what made them think that it's a bloodbath. Uh, However, I do not see any sort of bloodbath as of now. We have seen, what we are observing is a little bit of correction, which was, due. Uh, if we, measure from this top to this bottom here, it's somewhere around 5%. And from this top, it is, almost double. I do not see any sort of bloodbath. Yes, a due correction is going on in the market. If your portfolio is around 25-30% is down, then we can say that yes, there is a bloodbath which is going on in the streets. So far, things are looking in control. Now let's see what we can see on the charts so that we can build the scenarios for tomorrow. So the first thing that we can see on the chart is the completion of this measured move here. So what is a measured move? So we have this first leg to the downside here, right? This was the initial leg, from where the downtrend has started. And then we have this little bit of correction and the second leg of the move. So if you measure it, if you just eyeball it or measure it with some tool, both these legs, should be around of equal size. So with the completion of the second leg, we can say that this measured move is over for now. So let's just clean this up first. So after the completion of this measured move to the downside, the prices have reached to this support area, right? So we have mentioned it in the last videos as well that this was the breakout failure bar, and from where the second leg has also started. Now we are below the support area, right? We are below the moving averages, and now we have reached to the support area, which is around 17,400. And with the completion of the second leg and prices reaching to the support area, now the expectation is that either prices should rest before they continue to the downside, or they should take a turn to the upside so that at least a short-term rally can be seen, right? So from the daily we can see a completion of a pattern. In the hourly we can see that prices have reached down very rapidly and have reached to this support area. So with that, the use of this support is over, so we can just remove it. So prices have very rapidly have come down here, right? And if you can see today, they have moved very fast from this support area to this support area. Now a fast move to the downside simply means that there is minimum to no resistance to the left, right? So which means that if prices will take a turn from here, right, there would be nothing to stop it. So in other words, we have a void to the upside. So if we see a little bit of gap up opening tomorrow, or let's see if prices open in the range but they try to move up, we can do a scalping to the upside. But then we need to be careful because from the higher time frames, we can see that prices are in a downtrend. In a 5 minute time frame also, prices are now, looks like that they are, trying to stabilize here. So we have this first, head kind, shoulder kind of a thing, and then we have this head. Let's say if prices come down and then reverse, that would be the completion of inverse head and shoulder pattern in the 5 minute time frame. So if that will happen, and if prices will move above and give a closing, above the this 60 period moving average, that would be an indication that we can, at least in intraday, we can play to the upside. So from higher time frame to the 5 minute time frame in Nifty, we can see that tomorrow we might see a little bit of stabilization, a little bit of smaller or narrower range body. If that will happen, that would be an indication that in coming days prices should move down and will try to reach to the next area of support, or the reference point as we call it. So after this much of move down, be careful. If prices gap down, just do not jump on it to either buy puts or go short, because we have a completion of a pattern, right? And a gap down now would mean a trap also, right? Until and unless it's a gap with a huge percentage, and then prices would continue to move down. So the best way to analyze if it's a gap which will reverse, just wait for the first 5 minute time frame to complete. Sorry, the first 5 minute candle to get complete. So once that candle is complete and then prices starts to reverse back up, that would be an indication that we can play to the upside. So that's in Nifty. Now let's see what is happening in the small cap index. So again, we have a big move down. Prices are now at support. So that would also indicate that prices should take a rest here, right? Because we have from this top, now prices have come down to a support area, right? So if we draw the support zone here, we could have it somewhere like this. So prices in the small cap index as well, we have prices which have reached to the support zone. So again the same advice, that if prices gap down, do not just jump on to it to go short in it. The stocks which comes to this category, which comes from this category, just do not directly short them. Wait for the first 5 minute candle to complete, and then based on the overall market scenario and how that first 5 minute candle has formed, you could have take the decision. Then we have the mid cap, again multiple bars to the downside. So with that, often I have seen that if there are multiple bars in the same direction, and then you have a big range bar, right, that would often halt the trend for a shorter period of time. So just wait for it, and let's see if it forms a continuation pattern, or if it will just continue to move down. Bank Nifty, so we have this support which is now over. So as I have mentioned in the earlier videos as well, that Bank Nifty continue to look weaker, and we have now Bank Nifty which is moving down in a row from past many days. So let's see, it is now approaching to the rising 200 period moving average, and my opinion would be that if it will gap down tomorrow and touch the rising 200 period moving average, then the reaction should come, and it might show a short-term rally from here. So we have seen a big down move today. So my expectation is that it should not, until and unless something big is happening in the market, we should not see the same sort of move tomorrow as well. So be careful while shorting. Then we have IT. So IT is relatively looks stronger, but consolidating. So nothing much here. So pharma is down from past many days. So if you have shorted these stocks, this time you might try to book your profits, take some profits off the table, because it is continuously moving to the downside, and after such a move, prices should halt, and they should reverse from here. And we might see a short covering in the pharma sector, so be careful with that. Auto is it has completed the M-top pattern. Now we are still in the uptrend because we have a major support area which is here, and we have the price location here. We have the rising 50 period moving average also. So if it will gap down and reach here, that would be an indication that prices might recover, or a short covering may come. Energy has started looking weaker, so it is now below the 50 period moving average, and below the it has given the closing below the support area also. So it looks that the energy stocks might move down further. In an hourly, we can see that the pharma index has been moving down continuously, and today we have seen a very strong move to the downside. So the best way to pick stocks from the energy sector to go short would be those stocks where you can see end of the day ranges, right? If you can see this in a 5 minute, so at the end it has consolidating and form a range. If you can find same sort of range in an hourly time frame also, that would be the best stocks to go short in energy. So stocks which have shown a fall like this, same as the index, just do not pick them to go short, because they might consolidate or might reverse from here. So reality is taking support in the 50 period moving average. So tomorrow we might see a resting day. FMCG again weaker stock. We are below 20 period, and 20 period is below the 50. So this shows that as we have seen a completion of a measured move to the downside in Nifty, we might see the same kind of pattern in the FMCG sector, where we have this initial leg and prices are consolidating, and we might see same sort of move, same sort of second leg to complete the pattern. So if you can just measure it, it is around around 9.5% move down, and if you measure it from here, it would come somewhere here. So this, if this much of fall has come in FMCG sector, then be careful with the stocks which you have in your portfolio, and you might get good opportunities to in the shorting side. So just try to pick the stocks which looks weaker than the index, and they might give you best returns if once the second down leg will start. Metal again might be in a beginning of the second leg again. So that's it in today's analysis. Hope you have enjoyed it. So if you have any questions related to any stocks or the markets, please comment them, right? I will definitely reply. So that's it. Take care. Bye and catch you later.